Just gonna give it a minute, see if anybody from Eat Finance wants to join, and we'll get it started. All right. Well, they can join, or it can just be you and me, and then they can watch the reporting. All right, let's get this going. We're gonna go rapid fire because, like I said, my pacing has been terrible, and there's not that much to really discuss at this point. So yeah, uh, we've made it through a crazy week. We had four different global banks, messing around with rates. We had Wild Wednesday with Papa Powell and the Fed announcing a 75 basis point rise. We had Bank of England on Thursday. We had Bank of Japan on Friday. We had the Swiss bank uh, announcing their rates and then also selling off something like in hundreds of billions of U.S. bonds. I don't actually know what that was. That's beyond my scope, but something that was partly responsible for the action yesterday, or sorry, overnight prior to yesterday, I should say. Seems to be from that again 12-figure Swiss bank bond sale, part of their quantitative tapering efforts. Um, so anyway, yeah, let's go straight through equities because it's gonna be real quick. We're gonna do divergences with the headline being that yeah, everything is still intact. I've been sort of I've been saying, like, this week is going to be our answer. I guess I mean, I'm not going to give myself additional leeway. I said what I said. Maybe this week in combination with next week is the true answer. But anyway, let's take a quick look at the divergences. I'm going to turn off volume because volume is not going to apply to this portion. Here we go. We're going to start with tech. I'm intentionally leaving the SPY off because it makes me laugh. Anyway, we'll do that one last. So here's tech. Very simply, we're on the weekly because we just had a weekly close a few hours back, and yeah, bullish divergence is intact. We've got a lowest low on the RSI. Oh, let me get rid of this trading view thing. Do not pay for it. Anyway, we've got a lowest low value on the RSI back here on the week of May 16th, 28.5. We've got a lower low price and just barely higher low on the RSI. You can see it's at just over 30.08. That right there is a divergence. We've got, again, lower low price, higher low on the RSI, boom, bullish divergence on the Qs. Next up, let's go to the Dow Jones. We're going to look at the DIA, which is the proxy fund for the Dow Jones, so it's a little bit easier to look at with the numbers. Again, really simple. We've got a lowest, the lowest value on the RSI back on May 16th. The RSI was down at 29.4, and now this week we of course closed at a lower low price, but a higher low on the RSI at just above 31. So again, that's 29.4 up to 31. Lower low price, higher low on the RSI. That is a bullish divergence. And before I continue on, a reminder that divergences do not have to play out. They are just one tool in our belt. But a divergence on the weekly is it's something to take note of. It can be the deciding factor. So it doesn't have to play out, but boy, when all the indices are lining up, you know, it's hard to be bearish yet. In terms of like the market completely collapsing. It just hasn't shown that indicator yet. So again, bullish divergence here on the Dow Jones. Go to IWM small caps. I believe this week did also close out just barely. Yes, they did pull it back. Okay, so small caps is worrying me on the daily. Um, I've seen that crypto, especially in terms of the risk on space, has followed small caps, maybe even more closely than tech, especially in these past few weeks when crypto just could not catch a bid, even when tech did. You can see how it sort of travels a little bit differently. Especially this week, IWM small caps went down a little bit further. But look, small caps caught a bid on. Oh, sorry, we're still on the daily. I promised to do divergences, but really quick, we've got a harami forming here at the bottom. Sorry, not the bottom. What could be a bottom on the small caps. So we do have a harami. Harami patterns have been playing out. It played out over here on June 7th. You had a bearish harami, which is this sort of internal interior trading candle. The easiest way for me to remember harami is harami. It comes from, I believe, the Asian trading market, where it means like pregnant panda or something. But in any case, that's how it helps me to remember it. So a harami pattern is whatever the baby is inside the womb. So you see it's kind of like a little red baby inside of a green mom. Whatever the baby is typically, if the pattern plays out, it'll be what happens next. Is the general thought. So again, red little panda baby, red down. In this case, we do have it's a little bit uglier. It's not quite an inside trading day. The sting candle went up quite a bit on small caps yesterday, but it still counts. It's a harami. It stayed within the range of the prior candle. So you've got a green little baby here. Maybe that plays out and we get something on Monday. But again, I promised weekly divergences really quick. And same story. Back on May 16th, we set the lowest low on the RSI. It's down there at 28.7. Closed at a lower low price for this week, up at just barely. They pulled it off, 29.15. So again, lower low price, higher low RSI. That is a bullish divergence on the small caps weekly. I'm gonna keep saving the SPY for last because it's my favorite one. So I'm just going to go down my list again of other asset classes to look at for those divergences. Here we're on the DXY, which is the dollar index. And again, just barely. You can see how close everything was this week and just how much, I don't know if it's traders or bots working in tandem, but man, they were giving everybody heart attacks. So right here, we can see that the prior high for the dollar was back on actually week of May 9th. And so anyway, that was over here, just under 104.5 or something like that. Anyway, prior high, had an RSI reading of actually closer to 80.97. This week, the dollar set a higher high price, just barely, but it is a higher high on price, and currently it is working on a lower high on the RSI down at 70.91. So again, higher high price, lower high RSI. The dollar typically trends counter to the equities markets, and at least in the past, crypto. I discussed that a little bit more yesterday. I don't want to harp on it too much. Initial jolts can trade in tandem. So, for example, like on this May 16th week when the dollar first plunged, we saw the market, as we just showed, the market hit a low. The dollar does tend to all of these that I'm going to discuss, all these sort of reverse or negative divergences, the things that we're rooting for to go negative, they often peak or bottom before equities. It's just how it works. I can maybe look into it more why that happens, but for right now, I'm just talking charts. So again, we are rooting for the dollar to go down for both our grocery bills' sakes, as well as our equities portfolios. So higher high on the dollar price, lower high on the dollar RSI. That is a bearish divergence, which we would hope is a good thing for equities, for crypto, and for our grocery bills. So since it's a negative divergence in an asset that we want to go negative, that's a bullish divergence, hopefully. Next up is the VIX. I'll give the same sort of caveat that I've given before, which is, look, by the nature of the chart, and I don't have to explain beyond these crazy candles. The way the VIX works, being a derivative of volatility, it tracks fear in the markets. It's not as easy to track geometrically, but you can still see it show up. You can still see divergences, and all along here, you've got the highest RSI on highest relative strength for the VIX for volatility was back here in November, and it was closing down here at 30.5. Now, of course, we're first of all, we've set closing prices above it already with lower RSIs. Over here was a lower relative strength peak compared to the price peak where it hit intra week, and another one here. Actually, this was on a closing basis. It closed up here at a higher price. You can see higher high on price, lower high on RSI over here. So that's a triple divergence, and actually potentially quadruple forming. We've got again a higher price close, just barely 31 compared to back here in November of under 31, 30.6. So higher high on in price again for like the third time, and again another lower peak on RSI down here at 57 point, just about 57.5. So these lower peaks down from November, that's higher highs, lower highs. Eventually it'll snap. Eventually all this turmoil will end. So again, that is a negative divergence on a market that we're generally hoping to go negative, two negatives. Making a positive. I would call this it's a bullish divergence overall. Negative divergence on this chart for the VIX for volatility, but overall bullish for us. We would hope. And again, VIX, much like the dollar, often peaks and valleys before the effects are seen in equities markets. It's just the nature of it. Over here, you can see that the VIX spiked on the 29th. And if we take a look at the Qs, they did not spike down until the week. Or sorry, you know what? This is why we do things live. I made a mistake. Here, the VIX and the Qs actually lined up. So perfectly, the VIX went up that week and tech went down. So I'm glad I caught that. I'm not sure. I had another example lined up, but I'm not going to waste too much time finding it. You know what? Let's just keep moving on. So again, that one showed confluence between the VIX movement and, at least on the tech sector, a confluence between their movements. So I was incorrect there. And that's why we do this live. Okay. But in any case, the divergence is, of course, playing out. We've got a bullish divergence on the VIX. Well, bearish divergence on the VIX, which is bullish overall. Let's keep going. Let's go to high yield corporate bonds. Over here, again, just going fast through the weeklies, we've got a low value on the relative strength for high yield corporate bonds down at just about 21.8. And then we set a close at a low price this week up at 28.4. So again, low price, higher low RSI. That is a bullish divergence on corporate bonds. Not only that, but this week is a textbook spinning top doji. So it's one of those things where it's not going to take a whole lot of effort and capital to push it one way or the other next week. It's an indecision candle. So, you start seeing on a closing basis, on the hourly, the 4-hourly, and certainly the daily, you start getting under this. You start seeing red. Obviously, downtrend is very much still possible. And of course, if you close below the low, if they close below the low of this week, start closing below 72.89, you start seeing, again, hourlies, 4-hourlies, dailies below that value, then we can be in trouble. That said, it works also, in the opposite direction. Again, it doesn't take a ton of capital to start closing above the open, get above 74.3 on the hourlies, the 4-hour hourlies, the dailies, get above, and certainly if you get above the high value of 75.3, 75.4, boom, you can start to form that morning star candle. Nice big green candle going the opposite direction. Again, speculating, it can go either way. That is the nature of a spinning top. It can break down or up. I know that's not an answer anybody likes to hear. Oh, well, tell us which way is it going. I can't. That's the point of an indecision candle. It's just to say that it's not going to take a ton. This is a boulder on the edge of a cliff. It can roll either way. There's a lot of rubber band action. This market is way down, oversold. Like, it's very possible that this breaks up and gives us one hell of a gorgeous morning star, but it's just as likely to give us a continuation candle, if not for, again, the bullish divergence playing out. We hope to use that as a tool in our tool chest. And then I've spoken about it before, so I won't go into it too much, but the bond market, especially high yield corporate bonds, that's where the money is. If you think there's, a trillion or a couple trillion in stocks and equities, bonds have, 5-10 times that. It's where it's the fastest market on earth. And I know people laugh at that because bonds are the slowest moving asset in terms of percentage, but in terms of speed, in terms of determining market moves, oftentimes it's the bonds. That's where the money's made. So it's a good thing to look at such powerful markets as high yield or corporate junk bonds. And so again, bullish divergence here. That is good for us, historically speaking. The last one before I get over to the SPY, let's go over to the US 10-year yield, which of course puts pressure primarily on the tech sector. 10-year yield, of course, representing the cost of money, the cost of borrowing money. And when it's up too high, you can't borrow money to, throw it into your startups and your ARK funds and all that kind of crap. So, generally speaking, higher yields do put pressure on the tech sector, which makes up a huge part of the S&P. So higher yields typically put pressure on equities overall. So we are rooting for it to go down. And once again, we've got actually a little bit of had a funny open on May 9th, but back on May 2nd, we saw the highest value of the RSI up at 81.58. And and we just closed again, second week in a row. So, and this is doubly exciting, but I'll get to that in a second. So again, we closed at a higher high on price, and currently a lower high on the RSI. It's down at 73.3. So again, higher high on price, lower high on RSI. That is a bearish divergence on a chart that typically we want to go bearish. Negative plus negative, or negative times negative, bearish times bearish equals net positive for us, net bullish divergence for our portfolios. Again, negative divergence on the yield chart, but overall I'd say that's bullish for us. And then what I wanted to bring up is, of course, if you haven't seen it yet, that is one heck of a beautiful topping candle. If you're somebody who's not into geometric analysis or TA or whatever, I mean, it's hard to deny that is some serious price movement. They could not get it above this value, and not only that, but they straight up rejected that value. It looks like 3.5% was the number for market makers. So this is a topping candle that is an inverted hammer. Yeah, a little more to say about that. Typically, that's the kind of candle that forms at the tops of trends, and it would suggest, in combination with the bearish divergence on this particular chart, that it could be the end of this uptrend. Crossing our fingers, we're going to watch it. Of course, we do not trade on any single bit of TA, but when as I've said before, you start to take things all together and you turn them into a trend, and and you can kind of get the direction things are going. It would suggest that maybe a downtrend is next, and that's nice. That's a nice, happy thought. Okay, last up. I know I've been putting it off. Let's get to the SPY. Let's get to the S&P. Let's go to my one of these days. I'm gonna delete these lines. It's just here for posterity because I mean, boy, did we nail these levels. I mean, look at how these levels held up. Ugh, it's beautiful. So many hits right on these lines. This one was particularly juicy on May 16th. I mean, that hit that 380 line perfectly. And speaking of lines, here we go. Let's actually go down to the daily, or sorry, really quick. Let's get the weekly divergence in, because it just makes me laugh. Again, I think I said in a comment earlier, TA deniers are in shambles because look at this. So we've got back on May 16th again. The lowest value on the relative strength was 30, and I want you to write this down, 30.28. That was the prior low for the price, and it was the lowest low value, well, sort of, on the RSI. And this week, you guys know where this is going, we set a lower low on the price, and the relative strength value is 30.28. Yes, 30.28, and exactly 30.28. Out to the 100th, they matched the relative strength. If you don't at least consider TA to be a possibility, I have nothing to say to you, because come on, down to the 100th decimal. It's just it's amazing. And not only that, actually, sorry. So let me just say that this is still considered a bullish divergence when you've got a again lower low on the price and a matching RSI. Typically, because the market is overall optimistic, analysts with much more experience and knowledge than I do consider this to be a bullish divergence. So it is still in play. Of course, not quite as strong as if they had closed the week in a purely in a purely higher low situation on the relative strength. But again, people who I don't know, you might call like chartists or like analysts or whatever, people better than I am, they do consider this to still be bullish. So again, not as strong as if it had just been a pure higher low, but it is still a bullish divergence. Lower low on the price and matching to the decimal on. I want. Can you open this up into the other decimals? I gotta see. That's standard deviation. No, I guess I don't know if anybody can tell me in chat if you can go out more decimal places because I'd be very curious to know, or if I have to like pay for it. I don't know. Maybe I'll do it next time. Oh, precision. Precision? Can it be this one? Can I go out to 7? Does this do anything? Is this for decimals? Oh, it is. It is. Okay, great. Okay, let's take a look at this. We're gonna do this live. I haven't looked at this yet. Okay, so here we go. May 16th. I can't believe I'm doing this. 30.2796. So we're at 4 decimals. So 2796. And where do we get here? 27. Oh no! It actually breaks down there. So if you go out that many decimals, 30.2761. It is technically speaking, if you go out far enough, a lower low on the RSI. So that's bearish confluence if you go out 4 decimals. We do have to say that. I don't know that bots and market makers are going to care, but just for posterity, yes, technically the divergence broke on the weekly if you go out to the 10,000th place on decimals. I do want to say, oh sorry, just the thousandth would have done it. So yeah, so if you go out 3 decimals, the divergence broke this week on the SPY weekly. I don't have anything to say about that other than, I mean, take it for what you will. I still consider that a bullish divergence, that they stopped it basically on the dot on the 100th, but you do you. I don't know how to turn this off, so I will do that later. More interestingly, we've got, again, that line. Oh, my drawing disappeared from yesterday. Yesterday I drew a straight up green bullish cross, which is funny. We did get that today, although this is a spinning top, not a cross. But it's funny that we kind of drew that out. If anybody watched the last stream, I had thought that maybe they would go down to touch this now legendary gap. I've seen other analysts' videos overnight come in, and they were talking about this 358 gap from way back over here. It was a gap that never closed. Yeah, right here, November 24th. It was a gap that was still in existence, never closed even intraday. And so that's where I drew that line from. I thought maybe the markets would really like sting down, scare the crap out of people, fill that gap at 358, and then rocket back up. So I drew one with a longer green shadow. But I didn't quite get that today. Instead, it was just, that is a pure spinning top indecision candle. Green, so a little bit bullish. And most importantly, closing value of 365.86. And what have I been saying? What have we been saying? 365. This is, I've had this green bar in place for a while, and we showed it earlier. It is the number. It is the inflection point for the entire stock market. Talk about market symmetry. Right there, that green line, which is, it's a terrible color. It's no longer going to be green, so say goodbye to the green line. Let's make this bright orange, because for warnings. Market symmetry, it goes back right to those weeks where the bull market went into hyperdrive. So for people who look at market symmetry, this is your moment. We nailed it. The market literally ended the week on 365, a couple decimal points above. Whew. That's all I got to say about that. Okay, so divergences basically in play on everything we were tracking, including the SPY. If you don't go out to the 1000th decimal, if you do, then it is my duty to say that technically the weekly divergence did break. It is a lower low to the 1000th decimal on the RSI, but generally speaking, it's either neutral or bullish. I don't know. Yeah, like I said earlier, you got to wait for confirmations. Divergences do not have to play out. It's just another tool in our belt. So we'll see. We're gonna see what next week brings. I incorrectly stated that this week would be our answer. I think this week is part of the answer. It's this week plus next week because you need a confirmation candle. There's no reason for this to not continue down. There's also no reason for it to bounce here. I mean, it has hit every target, every strength. You've got bullish divergences, clear bullish divergences on every other market, including tech. Tech has a clear bullish divergence on the weekly. There's no denying that. Tech often bottoms before the larger S&P. Tech often recovers sooner. So if you consider it to be a sort of bellwether, sort of canary, then you would have to lean bullish. You would lean bullish on the SPY as well. But yeah, we'll see. We'll wait for confirmation there. As for crypto, which is why we're here, let me see. How have I been streaming? I do want to get better with my pacing. 27 minutes. Okay. Let's see if we can get this done in 10 minutes so that I'm not wasting anybody's time on this lovely weekend. You can take a quick look at chat. Oh, thank you, Anna. Very much appreciated. And thank you, Autumn Network. Thank you guys for joining in and everybody else for joining in too. Okay, crypto. I'm not really going to touch, I mean, we'll talk about ETHUSD, but I think we know it's mostly just Bitcoin and the ratio that is going to be driving the next few days, few weeks. So where's Bitcoin at? I still have the meme line at 21,960. I'm gonna leave it for now because it's fine. It's not really changing anything, and it did actually play a part on the daily, which is very funny to me. I drew that just for shits and giggles. It's always risky. Yeah, I did this stream around 0 UTC. It's always a risk because there can often be some volatility there, and I find my eyes like drifting towards the charts, like, oh, what's happening now? And uh, real quick aside, guys, just don't look at the charts when it rolls over at 0 UTC. I mean, there's always crazy volatility. Bots go nuts. You never know what's going to happen in the next couple hours. Plus, gas price spikes, and it's kind of annoying to do trades and stuff like that, especially anything in DeFi. Okay, so Bitcoin on the daily, I mean, flat, flat, flat. Broke out of a, where's my drawing thing here? So yeah, I mean, very, very small, basic bearish flag pattern there. I mean, hardly a bear flag, but it did break out of that. And so, we saw some lower prices once it lost 22K, but that's very easy to reclaim. I mean, Bitcoin going up, what is it, $1,500? That's cake. I mean, you can do that in half an hour or less. I can do that in 10 minutes, let's be honest. So not too worried about the strength of that bear flag there. The question is, if it starts to form another one, you've got this again, flagpole here, and again, the day just rolled over. So I mean, there's no reason to think that there's another bear flag pattern. But if it is through like today and then through Sunday, you could get another Sunday down or not. And then it's one of those answers you guys don't like hearing, but like it could just go up again. There's no reason for it to break down again out of this weak sort of bearish flag pattern. But it's just to say, it is there. Yesterday's candle did close as an inverted hammer, which is, I would say bearish, but every pattern's kind of been playing opposite. It's almost more about the relative strength on the day than what the actual candle prints. Like, look. Oh gosh, what was that? I'm just gonna circle this. So over here, back on June 15th, that candle, that's a big bull hammer. Right over here, you had this down, sideways, bull hammer. That should be like kind of a bottom forming, at least or at least stops a trend. But nope, market confirmed down, and that's why you wait for the confirmation. Price action is king, or queen, depending on what country you're in. So right here, this is kind of a bearish inverted hammer, but like. First of all, bear hammers don't necessarily work well at the bottoms of trends. It's not like it instantly brings to mind continuation pattern. It doesn't make me immediately think that, oh, this has to go down. But like I said, it worked the opposite over here. A bull hammer into a red confirmation. Why not a bear hammer into a green confirmation? It's just to say, let's wait for the confirmation. Let's see what some of the weekend volume brings in. Weekend volume is low and tricky and manipulative. It's not the best thing to go off of, but we'll see. We'll see what prints. Let's go to a slightly larger chart since we've only got 48 hours until this rolls over and we close the weekly. I've said a few times, like I think 19.5 I say this in quotes, needs to get hit. Obviously, no value on any chart ever has to be hit. Nothing ever has to happen. It's just been sort of weird to me that 20K held up so well because it's a psychological whole number. It seems like another spike down to 19.5, which is actually like a number on the charts. It seems like bots and arbitrage and market makers would want to tap that value. There's volume there on these weeks, but uh, you know maybe there's no open orders. Maybe it's just not worth it. So I I would say, oh, sorry, let's go down to the 4 hour right here. Um, so I mean, the 4 hour is not particularly strong. It's not particularly weak, but if you wanted to stab down, this is the way to do it. Um, you've got kind of just lower highs, basic. Well, okay, let's take this one thing at a time. On the price, we've got lower highs. So over here, boom, 22.9, 22.5. Currently speaking, anything can change, but currently, 21.1, 21.1, something like that. So, lower highs on the price. And yeah, lower lows. But now, at least in the past day, with like all the craziness of the week, which like congratulations everybody, we've made it through one hell of a week. After the week closed in the equities markets, it's kind of just wedging out. Um, you still got those. That line is wacky. Uh, yeah, you still got those lower highs, which I'm going to turn white. But you got this, higher low sort of forming. So again, it's weekend action. We're on the 4 hour. We're really grasping at straws here, but it can break out either way. So I'm not terribly worried. If they were going to make the push down to 19.5, you would do it on that crazy weekend volume. It'd spook people. If 19.5 breaks, so okay, when I say 19.5 is a level to tap on because it has history on the charts compared to just the psychological barrier of 20K, that doesn't mean everything's going to stop at 19.5. You would generally see them spike it through. So when I say 19.5, that's more of like a magnet. It can of course go to 18.5, I think 17.5 is a number that I've talked about in the past, not for any reason other than like it just seems about right. One other analyst I follow, who I will link in some later thread, he had picked out a 16.5 as one potential target. So maybe that, if they break through 19.5 somehow, maybe 16.5 is like the absolute stop. And I believe that was from, so I don't personally do this, but if you do like ABC waves, or you do, like something like, so you do like, A, B, C kind of things. Apparently, if you draw this line out, it goes down to 16.5. Uh, don't take that as gospel. That's just something I found. But, I think that 19.5 is certainly magnetic, but it can, of course, always spike through. What would that do to ETH? Man, I don't know. I've picked out zones. I've talked about them before. 1050 to 1250 is a zone that I keep talking about. We're in it right now. So there's not too much to say about that. The next zone down, if once you get through the psychological barrier of straight up 1K, again, I personally hold to the fact that 1K is a whole number and a psychological number, which tends to have less power on a chart because robots don't care about human psyche unless it's programmed in. That's not to say that 1K won't have a battle. Of course it will. But like in terms of actual like magnet numbers, I've found that like 750 to like 950, so below that target, is a different playground. I tend to think that 750 to 950 is where that would end up, and that's from when we first burst through in 2021. You can see this test. Let's zoom in over here. Started 2021. So, once we went on our rocket, what was the market trying to test? Right here, here's the 900 zone. So I'm kind of fudging it. It's funny. I'm using whole numbers to talk about my theory about not using whole numbers. But you can see that the market came down to test. Here was 980. Here was a scam wick down to 920. Initially, the volume started to build up at 750, which means that's going to be a potential zone that they would want to retest if and only if if 1K and 950 break with force, there's no reason to think that 750 can't be touched. There's a lot of dead air here. I mean, we never went back to it. So, this will be a zone, and then the bottom will be a zone. Or sorry, the top here where the pressure was will form the bottom of that potential zone. So again, 750 up to roughly where they're testing next. You know what? It really does go straight up to 1050. So maybe this is all one giant zone. If 1050 starts breaking with force, like on hourlies, 4 hours, that kind of thing, maybe I need to reevaluate. But in general, this whole thing set, 1050 down to 750. I mean, there's nothing. There's nothing there. We never tested it again. It's dead air. So maybe 1050 is more important than I'm saying. Um, but shoot that gap 1050 to 1250 that I was just talking about. Break below it. Maybe we just go straight down. I hope not, but I do think this is the next zone to play with. But like I was saying, I think the ratio is probably more important because right now the volume, the liquidity is going to be, as much as we hate to say it, on Bitcoin, on Grandpa. That's just where the money flows in and flows out, especially during these scarier bear phases. So on the ratio, I don't know if the daily is worth looking at. I took a quick look at it earlier and I did not see a divergence. Yeah. So due to this nice Scamwick, Barbara Scamwick, uh, yeah, the ratio got down to a low of what's the value? 0.49. So yeah, that's a low value, the lowest one on the chart in a long time, and it also happens to be the lowest RSI value. Actually, was it? Hang on, I'm looking at this RSI over here. Okay, so over here on June 11th, and again we're on the daily, so it's not quite as strong, but we're doing this live. Over here on June 11th, prior low on the ratio had an RSI of 2147, and then on this stab down on this little scam wick, it's actually only 21.8 on the RSI. So that is actually that is a lower low price, higher low RSI. So that is a bullish divergence. If we're going down to the decimal like we did before, it's a little bullish divergence on the ratio daily. And maybe that's been playing out. Maybe that's why it's kind of been bouncing up and getting back above 0.5. You can see it's been, I wouldn't say showing strength, but it's certainly not showing quite as much weakness in the past 96 hours or so. Lots of wicks down as the ratio gets frightened. But overall, I mean, this is again, potentially, as of now, looks kind of like a bit of a higher low. On the price up here, it sort of settled at 0.52 before bouncing up. Set a kind of a higher low on the RSI up at 23.2. So, that's nice. That's just confluence, higher low, higher low. We'll see how that plays out. But more or less, I want to take a look at the weekly. This is a little less outwardly bullish. There's no divergence here. Unfortunately, it's just lower low up to lower low on both strength and price. And you've got this cross coming up, the first of the death crosses, which is the 20 below the 50. It looks like it's going to happen unless there's, look, we can always have a V-shaped recovery on the ratio. I don't know what would spur that, but maybe. And you've got this death cross sort of coming in. It looks like it could happen. Let's see. This one was a value of, these are really hard to calculate actually, because the decimal, I'm not fast enough at it. It looks like went down 0.02, and this one went down 0.01. So, okay, so that cross could actually, that basically next week, if it doesn't recover too far above, let's say like the 100 week. So it looks like this cross could be next week, or certainly within the next 2 weeks. What happens when this crosses down at the start of a bear market? Or sorry, in a bear market, I should say. We only have one example of that because Ethereum wasn't around in early 2015 to look at it. So what happened last time? It was August 18, and we were basically preparing to start the next leg, the final leg down, but certainly the next leg down in the bear market there, since the bear didn't end until December. There could be more downside, is all I'm going to say on the ratio. Now, keep in mind that the ratio can go down just because Grandpa goes up and ETH doesn't go up quite as fast. And that's I think what we're hoping for, is that maybe the ratio, sure, slides a little bit. And I know it's not great. We're ETH finance. We believe in Ethereum. But if the ratio slides due to Bitcoin just kind of bottoming out and recovering, it's not the worst if we can go back up, against the dollar, against fiat. And the reason why that may be the scenario is, of course, what I've talked about before, the sort of indicator that I've been, I'm not going to say developing or tracking. I guess tracking is the right word. Let's go to the index for it. And that's where these Bitcoin moving averages cross. I don't know. I think we're already in that final leg of the bear market, at least if these values play out, if this is something to go by. If you weren't here for my first stream where I was talking about what could be a potential bottom indicator, we had the again, we're on Bitcoin weekly. We had the 20-week moving average go below the 100-week. Okay, green below red, and the RSI is of course oversold. So what happened last time those two exact things happened? It doesn't happen anywhere else on the chart except for at the bottoms of bear markets. It didn't happen here. It never went, in the COVID crash. Green never went below red, and we never went oversold on the RSI. I say we, but of course I mean Bitcoin. I don't have Bitcoin. But over here at the bottom in December 2018, 20 below the 100, green below red, right here. Look where I'm at. And RSI was oversold. It hadn't been oversold yet. 28.8. And right there, that's where the bottom value occurred. And it bounced around a little bit. It got a little. I'm sure people were scared back. In January. I don't remember my feelings in January. I think I was just dead inside by that point. It bounced around, but it never set a lower value. So demonstrably, green below red and oversold RSI. That was the market bottom value. And again, this only happened one other time in Bitcoin's history on the charts. Right back here at the bottom of the 2014-2015 market. Technically speaking, it bottomed in January, so it was the 2015 market, we'll just call it. And again, 20 below the 100, green below red. And again, so it crossed this week, or actually, did it cross this week? No, it did not. Sorry. So it did cross intra week, but most importantly is that green below red, and it has to have that negative RSI. The prior week, it was not oversold on the RSI. Here, green had crossed below red, and RSI was negative. And this week, January 12th, 2015, and boom, we got our bottom, nearly the bottom value. So I think anybody would consider this a very good place to buy. I think you would consider this the bottom. Yes, there was a spooky wick in August of that year, went a little bit below. I'm sure they scared the crap out of people. I don't think I was watching my Bitcoin at that point. I don't think I had enough to care. But I think you can give me some leniency and call that the market bottom. So again, 20 below 100 and RSI oversold. And then the last thing, of course, I pointed this out in my first stream. You have to use your imagination a little bit for this because Bitcoin hadn't existed long enough for the moving averages to have been developed. But you can kind of see at the 2011 bottom in November of that year, here's the bottom value, draw the red line out here, draw the 100 out to where it would have been. Give green a little bit more volume, a little bit more liquidity and volatility, which Bitcoin just didn't have at that point in time. Not enough people were trading it, but to give it a deeper slope, you can see that green, it could have crossed the red. 20 could have gone below 100, absolutely, with higher liquidity and volatility. We'll never know. You have to use your imagination, and I don't count it as a data point, but not too far from it. And look at the volume, look at the capitulation on that week, man. Again, it's all relative. Obviously, this is less than what, a million Bitcoin traded. But yeah, you can see how, and down here with the relative strength, again, with a little more liquidity, a little more volatility back in the early days, that RSI could have easily been oversold. So not a data point, but it could have happened. We do have two other data points though, in 2015 and 2018, and we're currently tracking to see if it's going to hold. Obviously, the macro economy is very, very different right now. This time could be different in the wrong direction, in that, if equities completely turn over, you start closing down below, this, what was it, at 3650? I think it closed the week at 3670. You get below that inflection point and you don't rocket back up, markets can turn over. It's absolutely possible, and crypto is going to have a hell of a time putting it a bottom if equities continue to drop, and more importantly, if the global economy just starts tanking. We haven't seen that yet. This time could be different, but we haven't seen it yet. And that's why confirmation is very necessary. We're going to see what happens next week. We had Plod witching earlier today, and typically, that's a pretty volatile day. The actual daily candle today wasn't that crazy on the SPY. It wasn't that crazy for equities. I mean, it was kind of You even go down to like the hourly. It wasn't that crazy. I mean, it had a drop at the start of the market, but it wasn't what I was expecting. Um, Even the prior day wasn't that crazy. It was mostly it was a lot of futures action. That was kind of nuts. And of course, the opening of today's candle where it dropped, uh, yeah, 1.3%. But not typical of what I was expecting out of quad witching volatility. So quad witching again is all the options contracts for the quarterlies, monthlies, and weekly. They all terminate on the same day for all four sectors: stocks and indices, stock futures and index futures. So a lot of money was moving around at the end of this quarter because funds, hedge funds, and market makers they have to move that money. They probably don't want to stay in the same asset class, and they're required, by fiduciary duty to be invested. So that $3.2 trillion in bonds that were settled has to go somewhere, and we're going to find out starting Monday where it's starting to go. Um, are they continuing to go into like safer sectors? Are they going to keep pumping up the dollar and bonds or not? Sorry, not even bonds. Actually, bonds are kind of going down. But the dollar and like consumer consumer staples, that kind of thing is like defense and energy going to keep going up, or are they starting to position back into risk on? I don't know. We're going to find out. It's the confirmation we're looking for. We'll start to get we'll get this I should say we'll get the second part of our answer, because this week was definitely a big part of that answer, and next week's going to be the confirmation. Where do they want to take us? If they take us down, crypto's going to have a hell of a time putting in a bottom. If the divergences play out and we go up, I think crypto's got, based on the charts, a decent chance to bottom out here, based on this indicator. And like, I don't know, I'm here with you guys for the ride. We're gonna see what happens. And so yeah, that pretty much does it. Sorry. Okay, I had a little bit faster pace today. That's good. I'm going to keep whittling it down and maybe start to do separate videos. Are there any questions from you few folks watching that something I can tackle? I know I do appreciate you guys. Slip, thank you so much. That's very kind. I think the only thing I didn't touch on today, from Anathema, we've got, if the divergence plays out, what do you envision a recovery timeline would look like, such as Ethereum retesting 2K levels? That's that's great. Let's take a look at that, and we'll even use Ethereum for it, since we do have the prior bear market to look at. How big were the initial jumps after the bottom? Without getting overly hopeful or overly optimistic, suffice to say they were big. If you started to DCA in as we approached the bottom, November into that December low, you were made whole fast. So again, bottomed out on December 10th. Let's say you were looking for some, I don't know if we had a divergence in 2018. No, Ethereum did not. So Ethereum did not have divergences, so we can't go off of that. I don't think Bitcoin did either. But in any case, if you're DCAing into the bottom, you were made whole within, let's see. We had from the bottom, next week's candle was 50%. And again, and given the old caveat that past results do not determine future performance. So we're looking at this speculatively. But yeah, after the bottom next week was up 50%. And the week after that was 7%. And the week after that was 12%. So yeah, from bottom on December 10th to we'll go into what happens next. I'm not leaving this out, I promise. But so within 3 weeks, it was up 86%. It probably got very overheated, as you can see, is in sort of maximum bullishness, and up here on the stochastic RSI. But yeah, that was an 80% pump from the bottom. Again, not saying that's going to happen again, but to answer your question, it could happen pretty rapidly. That at least it starts to test the underside of 2,000, 2K, maybe pretty quickly, if we do get a V-shaped recovery. Now, of course, we can't count out what happened just after that. It did need to cool off. It scared a lot of people being up that high. I'm sure if we go down into the dailies, we can probably see a little bit of the resistance show up on there, and maybe that gives us, we'll have plenty of time to do this, but we can sort of have heads up for what to look for if that V-shaped recovery happens. So here we are in the week of December 10th, the bottom, which was if we're going to literal values, it was on December 14th. and a little bit on the 15th. So here was the surge into January, and it didn't really get overbought. So I don't know. You know what it did do? It formed a divergence. So there it is. So it went up into this first peak um, over here on December 24th on Christmas. And it formed an RSI of 66, and then pushed up a little bit more, but it did not get above 66. It looks like it stopped at 64 was the next highest, 63.7. Okay, so it formed a divergence on the daily, and that's when it had to cool off. So we do want to look out for that. Woo, way out there. So we do want to look out for that if we do get a V-shaped recovery. Um, but then again, after that, we got the higher low, and like I said, there's no divergence for Ethereum off of that bottom, but higher low is a higher low. Boom, higher low on price, higher low on RSI. It dipped. Well, it didn't dip, and boom, we were off, and we were on our way to recovery. Again, it was a long road of stabilization. We had some downs. We had, of course, COVID over here. We had Grandpa doing its summer 2019 thing where it just completely slipped, and we weren't able to get a golden cross on moving averages. But yeah, it could retest 2K very quickly, but we will want to be careful if any divergences play out and the market gets a little spooked by how fast it recovers. Do value pivots? Do I value pivots in my analysis? The ratio S1 is sitting at 0.4-ish. So are you talking about standard deviations, Slip? I'll let you type that out while I read the next one out. Yeah, Slip, if you're referring to standard deviations, I'm not great with those. Is there an indicator on here I can... Trend line? Oh, crap. Free trial's running out. Let me turn off... I'll get rid of my 3MAs for now. See if we can dive into what you're talking about. So... Oof, ratio is testing the bottom of that trend, but it did bounce. So yes, Slip, do let me know. Sorry, I'm not familiar. I've seen S1 meaning standard deviation, but if you're talking about something else, just put it in chat and I'll look at it. Here are trend lines based on, I guess, standard deviations, and it looks like we're at the bottom of the channel right now and maybe due for a bounce based on this indicator I'm not super familiar with. And then from Dondo, a few months away, how do I envision the supply flow changes due to the merge factoring into your analysis? So, I come back to, price action is king. And so deriving from that, the charts, the numbers are going to matter more to the bots and market makers, sadly, more than fundamentals. But look, it's the strongest fundamental change in cryptocurrency, maybe global assets in maybe ever. When Bitcoin, and not to harp too much on Bitcoin, when Bitcoin first started showing real strength again in like 2015, 2016, is when you had those articles coming out from like Fortune and CNBC who were like, okay, cryptocurrency is now an asset class. And that was kind of Bitcoin's, if it did anything, it's that it solidified crypto as an asset class. And, it did some other neat things, but overall, Ethereum is way better. It's way more functional. So if Bitcoin's big thing was solidifying crypto as an asset class, Ethereum is going to make it, it's that triple point asset we keep talking about. It's both oil, gas. It's both, oil as a commodity, it's got value just to hang on to as an investment. And so it's hard to deny that things like the supply crunch have to affect the value. The only thing I would say is that it's probably not going to be on time with the market because historically it just isn't, and it pains me to say that. There was some talk last year about EIP 1559, which is wonderful and did good things with the burn, but I do tend to think that was more coincidence than anything. I think that the markets were strained. My MAs are gone, but if we look back, when EIP went live around here, you know, there one might say that price went up in anticipation of it. I I went on record as saying it was more of a coincidence last summer, and I do hold to that now. I think the merge, I think this change in supply is going to be massive, just based on pure mathematics. I mean, ETH is going to be deflationary. It's crazy. That being said, I don't know if the market will be on time with it. And that's all I can really speculate on. Yeah, it wouldn't shock because the market hasn't been on time with ETH fundamentals in the past. I don't know if it'll be on time with the merge going forward. I hope it is because I know we're all starting to position for it. We're all excited for it with the merge looking like maybe mid-September. I certainly think, but the merge is going to happen by end of year. I almost certainly. And September is looking pretty good. October is looking pretty good. I just don't know that I don't know if the market will be on time with it. And so, yeah, short answer, I'm going to follow the charts. I'm going to be hopeful because I love Ethereum, but based on the charts, I'm just going to have to watch with everybody else. Okay, going back to Slip, uh, pivots, Woody yearly is the indicator. All right, let's take a look. Let me turn off standard deviation trend line. Hello. Oh, there we go. Is it, and you're saying Woody? Is that? Oh, okay. Are you looking at VWAP, the valuated average, or just? I do love looking at valuated averages. I'm more than happy to take a look at that. If this is the wrong one, just let me know in chat. But um, something I've used. It's something. Oh, top one. Yeah, I'll take a look at that. I do. Okay. I don't use it on like a day-to-day basis, like when I'm making my posts in ETH Finance, and obviously I haven't used it in the streams. That being said, I do really enjoy when analysts bring up uh, on-chain analytics that involve valuated averages. It seems like I'll post some favorite videos of mine because I'm not knowledgeable enough to talk about it, but yeah, there's some really good on-chain analysts who use VWAP, and there's been some really interesting confluences on those charts. Okay, so here we are on, I guess, so pivot points, and okay, so this does look like a standard deviation chart. Okay, yeah, because you can see how it moves down with the daily. All right, so let me go back to your initial question. Do they figure into my analysis? Well, that one I answered. No, not on a day-to-day basis. I'm just not knowledgeable of it. But even me with my lack of expertise and knowledge on it, I can admit that obviously there are trends that form here. I mean, you can. Whoa, what is that? I'm just zoomed out too much. Clearly, you can see when it gets too stretched out. Things like to revert to the mean. Did I just say meme? Oh god, I think I just meme myself by saying meme. Things tend to return to. Oh god, I'm getting tongue tied. It's because I'm not drinking. I have a boba tea. I should have been drinking. Things tend to revert to the mean, or if you're gonna make a meme of this stream, revert to the meme. But so we were on. Oh, the ratios. What you even look at them? Sorry, I apologize. Okay, so S1's way down here at yeah, like you were calling out 041, 042. As I've talked about on prior streams, I do think that 04 to 045 is certainly a zone to be looking at. It's where we have structure. We've seen it obviously. Back when we first broke above, we saw resistance there in early 2021, and then when we broke above it in April. I'm going to take a wild guess. This is going to be messy. Yeah, so you can see there's a bit of a formation here. That actually doesn't. You know what? I was going to try and formulate a point, but it actually doesn't really work. Yeah, it was a bit of a resistance here, but this is actually up higher. This is up at 046. So let's go back to that weekly because I think that helps your point better. So talking about S1, which is the bottom standard deviation, yeah, things like to revert to the mean. Clearly, you can see the ratio was starting to get stretched up here. It just wasn't ready to stay above. Oh, what was How do these work? Is this S3? I don't know how these are determined. I'm not good at this. Um, I get resistance, right? So that would be R1, I guess, or R3. Anyway, it was above the top of the resistance, and it was getting a bit stretched out. So if S1 is down here, yeah, I mean, it's certainly something to look at. It certainly adds confluence to the theory that we could revisit 04, 045 as whether or not Bitcoin bottoms or if it just goes up without us for a little bit as the market sort of stabilizes. This is certainly a zone to look at. 04, yeah, look at S2 if that's how it's numbered. 046, 041, very close to what I was talking about. I was saying 04 to 045, just based on some of the strength periods back here. We've got, uh, a decent amount of structure. You've got this sort of breakdown candle, which clearly broke, right around 04. You've got 0385, which, it could be front run or not, but we're just going to round that up to 04 for a bottom zone. 04, again, over here on a high spike, right around 04. And then I believe I pulled the 045 from an inflection point. This is up at 053. Maybe I pulled it from a volume shelf. If you go back to my prior video, I had it. But yeah, 04 to 045 was what I was talking about. And yeah, these standard deviations seem to line up. This is 041 to 046. I think it's something to look at or something to keep track of. Again, the more tools in our belt, the better. And confluence is always good. So if I was just sort of pulling numbers out, not quite out of my ass, but maybe out of like my tailbone, we'll say. I said 04 to 045. Standard deviation chart has 041 to 046. Confluence is good. That's definitely a zone that we'll need to be watching just in case this breaks down. You can see here, we'll see how Sunday closes, but bit of an indecision candle, which means this can go, like I said, either way. I know it's not something we like to hear on these videos, like, oh, either way. How was that analysis? Well, that's the nature of indecision, ladies and gents. It's really easy to break above. It's really easy to break down. We're just gonna have to see, first of all, where this week closes and then where it confirms. If you guys don't have anything else, we're at the hour mark, which is totally fine. But we start wrapping it up. Unless you guys have anything else you want to look at. I realized as I was talking, the only thing I didn't look at was oil for divergences earlier. So I'll quickly do that, just to make sure that's still playing out. We've got a higher high on price, and currently a lower high on RSI. So again, bearish divergence on oil, which puts pressure on transports. So a bearish divergence on oil, like we're seeing, is overall, we would think, a bullish divergence. So it did also play out on oil. Awesome. All right. Well, thank you everybody for joining. Thank you for the kind words. Anathema, Slip, thank you for the questions. And yeah, I'll see you guys. I won't be able to do anything around, I'm not gonna be able to stream this weekend. Certainly not at market close on Sunday, but it's probably going to be, I hope it's crazy because we might get some confirmation. And then I'll still be posting on Reddit throughout the weekend if I see anything. Otherwise, yeah, I'll tell you guys when I'm streaming next. Thank you again for joining, and I will see you next time. Later.